Hey everybody, welcome to Trading Capital. It is May 8th on this lovely Sunday. It is a happy Mother's Day, so wishing all the mothers out there blessings. Jumping into the futures, we're going to do a little bit of a Sunday update this evening because I think there's some crucial things that we should all be considering as we enter the new trading week starting tomorrow. So with the futures opening, everything is pretty much opened in negative territory. We will discuss crude oil, the S&P, gold, natural gas, of course, and then maybe touch on some of the other commodities like lumber and coffee and what that signifies for the overall commodity. There's also a lot of economic data that I want to touch base on. So that is what could be potentially causing the volatility this week. And there always seems to be one thing after another for these markets. And whenever there's a lot of economic data and different data points coming out that could put the market on edge, that's when you're susceptible to a flash crash or a big dip that could catch people off guard. You never want the markets to be walking on eggshells or fearing, the next data, because there's always so many things coming out that could spook the markets. But looking at crude oil here, it's interesting to note that we do have this lovely parallel channel that we're trading in now. And the reason I've picked this top here, it was a topping tail on the chart, as well as this is pretty much your double top on oil. And if you negate this whole move here, this was kind of your blow off top, people that really called the trade wrong and got squeezed out. That's pretty much what this area is, the short squeeze zone. And it wasn't really a trade that was this was from, the demand and the supply and the true people that believe in the price of oil. This is kind of your mania blow-off short squeeze action that really is kind of a one-off event that shouldn't be counted. But nonetheless, it is your all-time high. I'm not questioning that. But when you look at this double top here, it just shows you that every time you've come up to this channel, it's been resistance. Then you've bounced off of it as support, and you've come up to it, chopped around in the center point of the channel, finally broke through the resistance points of the center point, and now you've kissed this channel not only once, twice, but 3 times, and you've pulled off of it. So this is going to be your big level off of this parallel channel. If for some reason you do break through that, then obviously your double top pivots here will be your next resistance. And I find it very difficult to think that oil in this current cycle is going to breach this resistance line and then obviously your all-time high back up here. There's always a chance that you could come back up for a double top, but again, with the slowing economy, that big R word lurking around the corner, and mark my words, over the next, maybe not over the next month or two, but certainly over the next 2 to 3 months, we're going to be hearing a lot more recession talk as that second quarter of declining GDP approaches to give us that technical definition of a recession. Obviously, we're prepared and positioned before that big R word comes, but you generally see some extra volatility and fear as the latecomer retail investors aren't prepared in terms of their portfolio for recession. They often react out of emotion and not logic and plan. Jumping into crude or the S&P 500 here, you have gapped lower. I kind of like seeing a gap down in the futures on Sunday because, it really depends on what type of gap down it is, where it's based on the chart. But when you look at this type of gap down, we are now trading into some major support here. You're at the low range of this parallel channel. This parallel channel, just like you had a parallel channel going to the upside since COVID, the QE channel I like to refer to it as, you broke that and you've now started what looks to be a downward parallel channel that is going to be very similar to this, but probably a lot faster to complete to the downside. So notice here we are at support. You can go a little bit lower to touch this channel or perhaps pierce through it like these two events over here. But I do reckon that the markets do get saved at some point if it does pierce through this channel, because I do think we have some sort of a little bit of a bounce. And one of the major trend lines that I'm watching is if you take the all-time high up here and you draw a trend line all the way through connecting those pivots, you have this pivot, You have this gap up on the charts, kind of your impulse move to break to this top of the resistance point on this channel. And then look here, you have basically hit off of this once, twice, 3 times, 4 times, you know, almost a 5th, 6th, 7th time. You're on the 7th time trading on this trend line, and you have not closed below this support line. So the reason why this is so important is because it marks your all-time high. It has your initial fall, your initial push up back to the resistance. You got rejected, so you had another fall. You pushed back up, got rejected again, so you had another fall, kind of put in this double bottom, you know, zone over here, and then you blasted through it on this mega robust rally. And now you're coming to trade back down, and the question is, when are we going to break it? It's not a matter of if we're going to break it, it's when are we going to break it. And the cool thing about this trend line is this is kind of a little bit more of a cycle trend line that we can use. If we pull this trend line all the way down, still keeping and connecting this pivot, this original impulse breakout zone, the pivot's lows all the way over here, if you carry that trend line all the way down, it shows that if the markets follow this average directional trend down, we could have a bottom in the markets, you know, coming into some major support here sometime in late August. So we would certainly know by then if we are in a technical recession. That's why I think it's highly probable to really start following this trend line down on the S&P 500. Now, a little bit how I think this pattern could play out is I think this trend line, since it is downsloping, I think we can use it for a couple, perhaps 1 or 2 more bounces in terms of a level of support where the pattern won't give way. But eventually, this pattern is going to give way. So potentially how I can see us playing this trend line is basically by playing it for a bounce, and then you come up to resistance, and then you come back down again. Looks like you'll pierce this channel and break it, and then you could potentially come back up for another bounce. And then eventually I think you get a hard sell through that trend line. That's going to be your big area where you finally break that downsloping trend line, and then you'll probably likely get a bounce back up to retest the original breakdown point, which was your support. And as if support is broken and confirmed, it becomes your resistance. So you could have a retrace back to your resistance and then eventually breaking lower. Now this is obviously just random projections and probably not to scale. I just quickly do it for this video, but it just gives you a sense that at some point we are going to have that hard sell that breaks through this channel over here, and that's going to be your key line in the sand that I hope we have the shorts piled on during that particular period in the cycle. And certainly I hope we have cashed out on our longs. That's certainly the intention, to flip our longs into shorts as we bounce off of support and head into resistance. So I think that gives us a little bit of an expectation for the S&P 500. I do think we are into some support. Again, we could head a little bit lower, but I do expect some sort of a bounce at least to the center point of this channel. And this channel can be used as a great guide as the trend heads down. Let's take a look at gold. Gold's interesting because you had your major bear flag pattern which broke. You have confirmed. You've also put in now this nasty topping or reversal candle with a substantial amount of volume. So it stands to suggest that gold can head lower. And the reason why gold can potentially head lower on us is for the one simple fact that since rates are rising tremendously and very quickly, that doesn't bode well for gold in terms of it thriving on inflation and basically sniffing out loose monetary policy. So as monetary policy tightens, and until we hit a peak in that tightening cycle, that's when you will see gold start to turn around. And that's going to be the beautiful triggers that we can use gold as our kind of leading indicator, because gold will sniff out the peak in interest rates and the peak in the tightening cycle, and it'll start to sniff out when the Fed becomes more dovish. So as soon as that transition happens from hawkish to dovish, or from peak tightening to now not as tightening, an easement of tightening, and then we start to head a little bit more in terms of the accommodative policy, that's when gold will ultimately put in a bottom and look to start rallying. But I think gold has a tremendous chance to fill this gap on here on the futures, as well as head to the bottom of this channel over here. So we were originally in the camp that we were going to accumulate gold on this trend line here. Now, the fact that you are consolidating above this trend line, so let me just put that trend line back in. But the fact that you are consolidating now above this trend line, and it looks to be that you're putting in some sort of a bear flag pattern here of consolidation, which is very likely outcome, then that means gold could potentially head a lot lower on a final flush out. So if this pattern triggers, you could potentially easily see that in terms of price action in gold. So just like we had a bear flag pattern here, we had this bearish consolidation, it ended up breaking over here, and now look where we're trading. And now we have kind of another bear flag pattern forming in gold, which could stand to suggest we break down even lower. So wait for the buy orders on gold. I may consider picking up a little bit on this 1840-ish level, but I do think we get that flush down. I think we pierce that 1800 level perhaps, and that would really freak out a lot of the gold longs out of the place, because it certainly got a lot overcrowded. I mean, I remember this bubble mania phase. I was just like, this is ridiculous for an asset that is supposed to be a stable moving. When you have a rise of this magnitude, I mean, this is basically what natural gas and all these other crazy commodities have done. So clearly it needs to be cleansed in terms of the cycle. Silver obviously has had tremendous downside. If you look at the silver futures, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 red candles in a row. Are you kidding me? Are you kidding me? Do you know how rare that is to see 15 down candles in a row? When you start to see that many down candles in a row, there obviously favors a bounce to occur. We have started accumulating the SLV for a swing trade. There's always a chance that you can come test this double bottom, which we will be a buyer of. And then in the event that you even go lower, you do have some support down here, which if you were to break and confirm below this green trend line, that would be your next area in the basically in the charts to start acquiring more silver to add to our swing trades. That would be a huge level on silver. That would be a very, very big level on silver. That would obviously come on the back of a recession, a slowing economy. 50% of the industrial demand, 50% of the demand comes from the industrial side of silver. So that's why silver has started to price in what looks to be pricing in a potential recession. Now, the one that we've all been waiting for, natural gas, we are pretty heavy in this position in our portfolio, but I think we're going to be rewarded significantly. If we look and sum up, Friday's price action, you had this amazing reversal candle, closed inside, and then what have we seen today? We've seen this gap down in natural gas, which is actually perfect. When you start to see these gap downs at the highs, it means that there's often a probability that the price is going to trend lower throughout the course of the day when the US and North American markets open. So if we just flip to the 30-minute chart, we can just start to look at this chart here. So you are probably going to come up and fill this gap. It's very likely, but I do suspect that you will pull off of that gap and start to trend lower. One of the reasons why you're finding support there is it's really interesting. I think we have this this megaphone broadening formation in our previous video. We have the shorter term broadening formation, which we've kind of almost completed. Well, in a way we have completed. And then we have lower down on the chart on a little bit of a bigger time frame, we have another medium-sized broadening formation. And then on the large daily, weekly chart, we have a huge broadening formation, which just bodes to the bearish sentiment or potential downside of natural gas. So look at this broadening formation here. You clearly see pivot high, pivot high, pivot high, bounced off of that. It just so happened to be your all-time high, or not your all-time, but your all-time cycle high in natural gas. It did pierce the $9 range here. Yes, it did. So you hit that whole number achieved obstacle. And the question is, how much more downside is going to occur on natural gas? I do think the downside will continue. Obviously, with a significant down day, there can be a potential little bit of a short squeeze event where the people who shorted at the highs are looking to take profits, so they could be covering their shorts, which you could get a little micro bounce. But ultimately, when you fill this gap, I do suspect natural gas price to continue to decline. If we look to see where natural gas is potentially going to go, I think this previous pivot zone here, all-time high, you bounced off of it a couple weeks ago. I think that's likely where you head for your support level. In the interim, it's back to around the 638 level. Of course, there are a couple key gaps on the chart along the way that we'll have to keep an eye on. You don't really see it on the futures. It's more so on the UNG, which is basically what we're shorting. But nonetheless, natural gas, I do expect that this weekly topping tail holds, as well as this weekly reversal candle holds. So let's just monitor natural gas. Be ready for a potential big move. I think we do get a pretty fierce selling that should commence as the inventory data comes out. But next week, what we should be preparing for in terms of economic data is we have, starting Wednesday, a lot of Fed speech. They're going to be discussing, obviously their economic policy, what's entailed, but we have Federal Reserve Chair or member Williams, we have Bostich, Waller, Kashkari, Mester, Bostich again. So there's tons of Federal Reserve members that are going to give their outlook for the remainder of 2022, which always could be market moving. I think smart money has priced in already what it is, but the media likes to hype up certain catchphrases of Federal Reserve members. They love to prey on the hawkish ones, and then in times of economic expansions, they love to prey on the bullish ones and use their words. So I think since we're in a period of more decline, they're going to latch on more of the negative hawkish comments, which is, in all fairness, is what's likely to come. So we also are going to have tons of economic data, inflation. So we have the core inflation coming out on Wednesday, May 11th. We also have the new inflation rate month over month for April, which will obviously give our year over year data as well for April. That's going to be tremendous. I think so. The previous was 8.5% inflation. The consensus is that we are starting to reduce on the year over year rate. So if we see a reduction in inflation, that could be great for the stock market, and it could be a short-term tradable bounce. We are ultimately looking for lower inflation. Since the consensus is lower inflation, around 8.1%, I'm really hoping that does come in around consensus or lower, because that will potentially fuel a bounce in the markets. It will potentially mark the short-term top in the U.S. 10-year yields, the 30-year yields. So we're looking for that potential lower inflation number. That will be great, not only for all of our wallets as well, but nonetheless, inflation data will be coming out midweek. We also have, since we're heavily in natural gas and we do have a little bit of a crude short going on Wednesday, we also have gasoline and crude oil inventories from the EIA. So that could potentially be market moving. Now, we know for natural gas that the build was bigger than expected. That's exactly what we want to hear when we're on the short side of natural gas. When their market's expecting less of a build and we get a bigger one, absolutely supports our short trade. And it is reserve building season, so I'm anticipating that we're going to get not just one or two, but potentially 2 to 3 to 4 of those extra large reports that show that we're building natural gas faster, and we're cutting that 33% deficit, that 33% 5-year average deficit from natural gas. It's now declined to roughly minus 16% deficit. So again, with another positive report, that could potentially even cut that deficit by more. And if we flip into the positive, where we all of a sudden have a positive 5-year average because there's been a big push from our governments for this energy security. The Russia-Ukraine war has been extra motivation. We've had liquidity and bills passed to push for new energy, sources. So that could potentially be the kicker that really helps us profit from this trade. Also, let's discuss what we also have coming out for Thursday. I don't think there's much Thursday. Oh, sorry, I stand corrected. Thursday is also big. You have the initial job loss claims. They're expected to be a little bit higher, the job loss claims. I personally think they're going to potentially be, coming in line with market expectations. But then we also have the PPI. And then the core PPI. So the PPI is obviously the manufacturer's inflation, producer price index. If that comes in a little bit higher, that could mean that there's definitely some headwinds for the stock market as producers like Apple and all these companies that produce items run into heavier costs, which could give worse forward guidance as we head down the road. More Fed speech Friday, there's not too much, but overall inflation for the consumer and then also producer price inflation as well as Fed talk next week will be the big economic data that we prepare for. Ultimately, I do expect some sort of reprieve. I do believe the US 10-year, which we should just take a look at. Okay, so the US 10-year here, obviously we're pushing that 3% mark. Ultimately, where we have resistance, let me just erase a couple of these. If we look to see why this pattern has broken out, we had this clear wedge formation pattern as well, and it's a descending wedge formation, so obviously they hold a lot of power when descending wedges break out. But if you notice that we had this inverse head and shoulder, so you have your left shoulder, you have your head area, and then this was your right shoulder. And then this orange trend line is your neckline. And when you broke out of this neckline, that was basically your top in the S&P 500. And it was also, as you hit the neckline, which is your resistance, that was your top in the NASDAQ. So it just shows you how technical analysis and using inverse patterns, breakout patterns, and reversal patterns can help you benefit from having your portfolio position. This is why we took on so many shorts, because as we noticed that interest rates were actually breaking out, and not only did they break out, but they confirmed 1, 2, 3 days in a row they confirmed, and that gave us a signal that the markets are in for a rude awakening. And certainly when you measure the upside potential, so to measure the upside potential of where this pattern can go, you take the low point of the head and you draw a plumb line all the way to the neckline. And then you carry that plumb line over. Let me just erase that. You carry that plumb line over and you put it to where the original breakout zone on the interest rate or the US 10-year is. And that takes you to a max move of around 3.21%, which also just happens to line up with your previous pivot double top high. So I think that will be your significant resistance level. It's just really interesting how inverse patterns measure exactly up to those double top or those resistance zones. So you can see that if this pushes up on Monday, Tuesday, the markets could be under a little bit of pressure. That's certainly what the futures are implying. And same thing with Bitcoin. But if once we hit that level, I do expect it to pull back and markets get some reprieve. Let's just discuss Bitcoin here. Bitcoin, we have been prepared for Bitcoin. You can clearly see that Bitcoin has broken out of its longer term channel here. We've been warning about this bear flag pattern. You broke down with this nasty reversal candle on heavy volume. That just shows this pattern is in trouble. You've hit this minor double bottom support, but you've cut through that. You're looking to now test this major double bottom zone. That'll be your big line in the sand. I do think there's a high probability that you can pierce it. Once you break that, 30,000 is your next level. That's going to be your huge level. Now we've got buy levels all spread out through this. and you are on a little bit of a 4-day down days in a row on heavy volume. So it shows that this could be a fear move that is potentially coming to an end. But we are positioned in crypto. I do expect that once the markets stabilize with interest rates, I do expect we get a bounce, basically a potential all the way up to this channel back here, or potentially this downsloping channel, just on this original channel. But your first resistance will be on this downsloping channel, which was all the way back up here where you broke down, came back up to test it, failed, came back up to test it, failed, came back up to test it, failed. So it's likely that this will be your first resistance zone that we could potentially look to short Bitcoin and unload our longs. So stay tuned for more updates. Hopefully everybody has a great weekend, and we will be ready for next week. Tons of economic data, tons of volatility. Funds need to adjust. Retail investors are going to adjust. The news is always going to be freaking